What's up, YouTube? This is Thomas from Thomas Invest and thank you for watching. Today I want to talk about Netflix, ticker symbol NFLX. I will give my opinion about the stock and will tell you if it's a buy right now for me. If you're new to the channel, make sure to subscribe to get notified when I'm posting a video. I also appreciate an early thumbs up, which helps me within the YouTube algorithm. For now, let's dive into it. Everybody knows Netflix, so I don't want to talk that much about what they do. But I do want to talk about the subscribers and the fundamentals of the company. First of all, in this chart we do see the growth of the amount of subscribers for Netflix. Netflix was expecting to hit 210 million subscribers, but they reported 207 million in the latest quarterly results. So this was quite disappointing according to the analysts and the investors. Alright, let's start with the fundamental analysis. At this moment, Netflix has a PE ratio of 58, so this is a red X for me. The high PE ratio means it might be overvalued. You want this number to be at max 20. If you really think the company is going to grow big time, you could gamble with 30. Netflix has a profit margin of 11%, so this is a check mark. You want this to be at least 10%. In this chart we see the revenue growth of Netflix over the past 5 years. We see a consistent growth and it's up 180% since 2016, so a check mark there. They grew at an average of 30% annually. In this chart we see the profit growth of Netflix over the past 5 years. It's the same story as with the revenue. It's growing consistent and since 2016 it's almost up 1400%, so a big check mark there. They grew at a 100% annually. It has to be said that they are growing at a slower rate in the past 2 years, as we can see in this chart. The numbers of shares outstanding are very surprising to me. I did expect Netflix to issue more shares in the recent years. It's increasing since 2016, so it's still a red X, but I have to admit that I'm positively surprised about the amount of issued shares. With the current ratio, you want to check if the company is capable of paying the current liabilities with the current assets. You want this number sitting at 2, where 1.5 is the absolute minimum. Netflix has a current ratio of 1.27, so it's a red X for me. But it has to be said that the current ratio is increasing in the past year. In 2016, Netflix had a negative free cash flow. Since 2020, the free cash flow is positive, as we see in this chart. It's growing, so it's a check mark. But it scares me a little that it's the first year of positive free cash flow. Because the 5-year average free cash flow is negative, it's impossible to calculate the price to free cash flow, so this becomes automatically a red X. It also tells me immediately that Netflix is overvalued. How much? That's something you have to dive deeper in. So my conclusion is that Netflix isn't a buy for me right now. The PE ratio is way too high. Margins are okay. Revenue and profit growth are insane, but it has to be said that I don't like the fact they just become profitable since a few years. Number of shares outstanding isn't that big of a problem for me. I did expect a higher number there. Current ratio is growing, but still too low. Free cash flow is terrible in the latest years. Because of that, we can't put a number on the price of free cash flow. Bottom line, I skipped this stock because of the fundamentals. But I think the stock price could rise in the coming months because of all the hype and people like buying overvalued stock these days. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked the video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a video. Thanks for watching and I will see you in my next video.